everybody. I hope you're doing well. With school being canceled again today, I thought it might be prudent for me to go over the financial statements with you based on the problem we did together in the virtual session on Monday. I know not everyone could be there, but I am going to ask you to watch this video and give you an assignment that I'll be due on Monday. Unfortunately, we're canceled out of class again today for the weather. So let's begin. Okay, so you should be seeing the adjusted trial balance from the Wells Technical Institute. This is problem 3.3a. I know some of you joined the virtual session and we went over this on Monday, and the plan was to do the financial statements in class today. But as I said, we're snowed out again, so I'm making this video for you, so yeah, at least you have something to kind of go by. Here's the journal and T accounts we did. If you recall, we did all the various journal entries. I think when we did this together, we combined the depreciation expense accounts. Either way is fine. I think that's the preferred method. Here's all the T accounts we did and the adjusted trial balance. And I believe we left prepaid rent off because it had zero balance. You don't need to put it on there if it has a zero balance. So remember, the purpose of the adjusted trial balance is to bring all of your accounts and their balances together in a summary after you've done the adjustments. Okay, and remember, the adjustments come after the transactions. Also, more importantly, it provides that total debits equal total credits after we do all of that. So the next step is to do the financial statements. So we have three basic financial statements. There's actually four major financial statements. Okay, so there are four major financial statements. Okay. The first one is the income statement. Okay. So the income statement has revenues and expenses on it, right? And its job is to determine whether there's net income or net loss for a specific period, usually a year. Net income or loss for a specific period, right? Usually that's going to be a year. Okay? You can do an income statement anytime you want. An audited statement would usually only be done annually. Okay? Two would be the statement of retained earnings. Okay? And the statement of retained earnings, excuse me, is designed to record the change in retained earnings over the same period as the income statement. Remember that retained earnings holds revenues and expenses, right? Okay, so records change in retained earnings over same period as income statement, right? Okay, and then we have the balance sheet. Okay, so the balance sheet would be done third, and the balance sheet, okay, reflects the accounting equation, right? So the balance sheet is looking at, after all of this, is our accounting equation in balance. So the balance sheet, we're going to have assets, right? Liabilities, common stock and retained earnings, right? No expenses, no dividends. They're already going to be taken care of in the previous statements. Okay. So these are the three we're going to focus on. The fourth one is the statement of cash flows, which is kind of beyond our capacity here. Usually you learn that in the first chapter of managerial accounting. Okay, so that covers the sources and use of cash. Okay, so we're not going to worry about the statement of cash flows right now. Okay, now when we look at the financial statements, okay, remember this is the purpose of financial accounting is to report the condition, okay, of the company to external users, right? And we do this through financial statements. So we can see here that for the income statement, revenues and expenses would be what we put on there, right? Okay. Right. So we're going to have to put the revenues and expenses, okay, on the income statement. Okay. Now, to do an income statement, okay, usually what we have here, okay, and there are several variations of the income statement, but this is kind of the standard one where we have two columns. We have an addition column and a total column. There are no debits or credits on financial statements, okay? No debits or credits on financial statements. And again, the reason for that is because of the concern for the unsophisticated investor. Now, I have this labeled here, okay, as addition column and total column because that's what they are. They would not be labeled on a traditional income statement, okay? So whenever we're doing the income statement, we would start with our revenues first, okay? Now, if we have only one item, we can just stick it in the total column. But if we have multiple items, we need to do the addition column. So we have two revenues, right? We have tuition revenue and training revenue. So let's do tuition revenue and training revenue. Okay. And so again, we could do the same thing we did with the trial balance, right? We can just type in equals. We can go back, pick up our number, right? Okay. Same thing with the training revenue, right? Okay. So Wells Technical Institute has total revenue, right? It's going to go in the total column of 176,400. Okay. Now we have to list the expenses. Okay. Right. Okay. Usually we skip a line in between. You don't have to, but normally we do. So what I would suggest we do is just put our expenses, and then I would just copy and paste them. Okay, that's the easiest thing to do here. So I would just select them all, copy, go over to your financial statement, your income statement, and paste. Okay, all right. We can indent it. We can get rid of the green here by just going up here and choosing the no color here. Okay. All right, so we know the drill. We might want to keep the same format. So this is Arial 12. We might want to do the same thing here. Okay, and then we can do the same thing. Now what's really cool here is if all of your stuff is aligned, you only have to do this once, right? type in equals, go back to your adjusted, trial balance, pick up your depreciation expense for the professional library. Okay. Okay, and then you can just copy it down, right? Because it's going to go to the cells underneath it. Okay. All right. Okay. All right. So then we got to get our total expenses. So we're going to have to fix our formatting here a little bit. Okay. So this should be just a regular, and you won't have to worry about this on a test. I will have everything formatted for you. So we're going to do our thick bottom border, and we'll do our total expenses. Put a border around that. And so remember, we want to put those in the total column, right? So we're going to add that and press enter. So we have 126,800. So this company has net income, right? So let me just move this down a little here. Okay, and this company has net income, right? Because its revenues, right, exceed its expenses, right? So whenever we're doing a bottom number on a financial statement, we need to have like a double line, and I think we went over this a little bit in chapter 1. Okay, but let's get the total first. It's going to be around 49,600. So we're going to take the revenue minus the expenses, right? And that's going to give us 49,600 in net income. So let's do our thick bottom border. We want our bottom double border, right? So that's our net income. Okay. So remember, if revenue exceeds or is greater than, right, expenses, you have net income. And of course, that's the goal of every for-profit company, right, is to have net income. Okay. Otherwise, you're not going to be sustainable, right? Okay. If revenue is less than expenses, of course, you're going to have net loss, right? Okay. And a lot of companies have net loss, especially small businesses in their first few years. But eventually, you have to earn income, right? You're not going to be around. Now, one of the things, what I mean by that is the business would have to close, right? Okay, so one of the things we can do is look at our profit margin ratio. So we can say, okay, I want to compare this return I got on every dollar in sales and see if it's even worth doing this, right? Okay, and sometimes that's a judgment call. Like if you look at grocery items at a supermarket, it's going to be 1 or 2%, right? So how do they make money? Volume, right? So there's other factors, but this is one factor that we can look at by getting the idea of, okay, for every dollar in sales we have, or every dollar in revenue we have, what do we get to keep? Okay. So for every dollar in revenue, what can we keep? Right? So this is what this will tell us. So if we take, okay, our net income and divide it by our total revenue, okay. Remember, Excel doesn't have the traditional division sign, so we kind of have to use the backslash. So if we take the 49.6 and we divide it by the 176,400, we get 0. That's because it's not formatted for percent, right? So we need to format it for percent. We get 28%. So that's a pretty good return, right? Okay. All right. So what I'm going to do is I'm going to close this video out now. And then in the next video, I'll do the statement of retained earnings and the balance sheet. Thank you for your attention.